The South African Revenue Services has paid out 2.4 billion rand in tax refunds since the lockdown came into effect. This forms part of President Cyril Ramaphosa's tax relief measures aimed at assisting business during the national lockdown. National Treasury also reiterated in a statement that SARS would fast-track the payment of tax refunds. In a statement, SARS said the payment of these refunds is a major cash injection into the economy and for businesses in distress. The Revenue Service has since paid over 1 billion rand in refunds to large businesses and 1.3 billion rand to small, medium and micro enterprises. SARS has urged businesses in distress to continue to comply in order to access the tax relief measures put in place to counter the economic effects of the COVID-19 pandemic. Well, for more on this story, I'm joined on the line by Kyle Mandy. He's a tax specialist from PwC. Thanks very much, Kyle, for joining us. So in terms of the various interventions that have been made, to what extent do you think these will have an impact on business?
They are likely to have a relatively small impact.
And just, yes, hi, Carl. And in terms of, we understand that there's very little fiscal room for National Treasury to really disperse in the way that we've seen other countries disperse large amounts of money to the economy, to businesses and individuals. So do you think that basically it's really not going to help that much despite all the efforts?
No. Look, I think there's a lot more that can be done. Certainly, if you were alluding to earlier the refunds that have been released by SARS, I think there's a lot more that can be done in that respect. At this time last year, SARS was sitting on a credit book of in the region of 56 billion rand. Not exactly sure what that is now because that information is not publicly available, but we think that at the very least 10 billion rand could be fast-tracked in terms of tax refunds without creating any undue risk to SARS's collections. So that would, if something like that happened, that would make a very significant difference in terms of providing liquidity to business. Now, in terms of the other measures that have been announced around deferring tax payments insofar as provisional taxes and the deferral of a portion of the employees' taxes are concerned, that is far less than what many other countries have done, where they've actually allowed the full amount of those taxes to be deferred for a number of months. South Africa is only allowing a portion of it, 20% in the case of employee tax, and what amounts to an effective 35% insofar as provisional tax is concerned, and then limiting it to small business only, whereas many other countries have allowed large business as well to defer those. So when you look at and quantify what the actual benefit is to business of what amounts to nothing more than a deferral of the payment of tax, the benefit is relatively small in the greater scheme of things. So I certainly think that there's room for a lot more to be done.
Yes.
In that regard, and bearing in mind that the tax relief are just part of a much bigger and broader package of relief measures.
Yeah. When you say that there's room for more to be done, what do you mean, given the fact that we know that there is very little fiscal wiggle room for National Treasury? Where else could they tap on funds to assist?
Well, I think we're in a very difficult situation. Yes, there's little room, but this is also a question of survival for many small businesses, if not the majority of them. If they remain out of business, even for the initial 21-day lockdown period, and bearing in mind that there's every chance that could be extended, many of these businesses are not going to survive that without significant support to cover them during a period of closure. The thing to bear in mind as well is that when that happens, we actually are talking about a substantial erosion of the tax base that will happen as well. So if that happens, you're talking about years of our tax base being eroded as opposed to providing a little bit of support now. Yes, we'd have to increase our deficit and borrow more as a result of that, but it's also about protecting the tax base in over the medium term as well.
Does it make sense then for the government to rather tap onto international financial institutions' money that's being offered for the coronavirus around the world rather than us going into further debt here at home?
Yeah, absolutely. To the extent that there are funds available on favourable terms from in terms of international support, absolutely South Africa should be tapping into that. They should be looking at every avenue of possible support in these very unusual circumstances.
Kyle, you already touched on it, but what does this 3-week period of economic inactivity, if you like, mean for the fiscus? Because we know that the fiscus has already been under pressure because of lackluster growth. We know that when we get through to the end of the lockdown, the economy is going to be even weaker. What does it mean for them? And in terms of their tax revenue targets, what is this going to do to them?
Well, there's no question that the tax revenue targets that were announced in the budget just a few weeks ago have gone out the window. There's no way that those can be achieved. Economic growth is going to be substantially down. In fact, we're looking at negative economic growth for the year. So we're talking about shortfalls of just on the face of it, at least 50 billion rand against what was budgeted, and that's in a best case scenario. So the shortfalls are going to be significant, but at this point in time, I think everyone's scrambling just to understand what the extent of the economic decay as a result of this might be. No one really has the answers.
Kyle, thank you very much for your time and your insights. That was Kyle Mandy.